Welcome to Real Estate and Taxes with Lakshay, where we help you minimize your taxes.
All right, good afternoon, everyone. Thank you guys for joining in. I know we're starting off a little bit late today, but I'll try to keep it quick, just like last time, 20 minutes top. And today we're going to be basically talking about things that, as a new person who has recently incorporated, they need to know. So once again, my name is Lakshay. Welcome once again for our Tuesday session. Today's topic is newly incorporated. Well, what are some of the mistakes that you want to avoid? So without further ado, let's get started. Today's agenda, I want to focus on a few things. If you're an old business owner, you probably already know about this. But if you're a new business owner, these are some of the things that you want to avoid or keep a track of to avoid interest and penalties. So first off, we'll start off with the new tax deadlines, the PREC, its requirement, what are some of the mistakes to avoid, the different types of accounts like the RT, RP, and RC accounts, the importance of enrolling into CRA My Business account, as well as how you can take money out of your PREC. So first things first, I'm talking about personal real estate corporation. So once you have incorporated your business, your tax deadline kind of changes. Technically, if you're an individual who has been filing taxes as a sole proprietor, your tax deadline has always been April 30th, 2023. If you become self-employed or your wife is self-employed, then the tax deadline moves to June 15, 2023. So basically June 15th or April 30th has been your tax year end. But now that you have incorporated, your tax deadline has really changed. It basically depends on what year end did you pick. Most of the time people pick the calendar year as the year end, but let's assume for an accountant, myself, I know my Jan to April period is very busy, so I personally have picked June as the year end for my corporation, and after June's year end, I have 6 more months to file my taxes. So I pick my own year end, and I have the ability to navigate during the busy season because it is not aligning to the calendar year. So something similar I would recommend to you as well. If you have newly incorporated and you have 2 corporations, one is a holding corporation, the other one is a corporation that you use for operating businesses, try to not align both of the year ends. Try to keep the year ends different for both of them because eventually when you're filing your taxes at the end of the year, you don't want too much of a burden. So if you have incorporated, if you've kept Jan to December as your personal corporation's year end, you can basically, your tax deadline would be June 30th, so 6 months after the year end, after December 31. But if you have a HST is usually 3 months after the year end. That means if you have a December 31 year end, your HST filing is due by March 31st. We all know everyone is now eligible to open a personal real estate corporation. Doctors, lawyers, accountants have this ability to incorporate from the past and enjoy lower tax rate. But with the changes in the system, you're now able to incorporate and enjoy the lower tax rate, which is 12.5% on first $500,000 of income. So if you were a sole proprietor, as your income increases, you pay more taxes. So most of the realtors, hang around the 100,000 mark where the tax rate is 37.91%. If you're an incorporated business, then of course you pay lower taxes, which is 12.2 to 12.5% on the first $500,000 of income. Very important to note. So one of the other things I wanted to mention is if you open a corporation for your PREC purposes, there are some requirements that you want to follow and make sure that you abide by. Number one is it has to be a provincial corporation, and all of the directors under the corporation, it could be anyone, but for a personal real estate corporation, the director needs to be the license holder as well. They must be a real estate agent or a broker or whatever it might be in terms of the real estate business. You cannot have your wife, your children as the directors, whereas other businesses like where you have trucking businesses, IT professionals, you have the ability to add your family members as the director. But when you open a personal real estate corporation, that is a big no, and you cannot have that. So make sure to keep that in mind. So you have 2 classes of shareholders and just like any business. Number 1 is the equity shareholders. Number 2 is preferred shareholders, which is the non-voting. The voting shareholders must be the salesperson, which is the broker of record. He or she must be the controlling shareholder. and they must be the president or the sole director of the corporation. So these are some of the conditions that you want to make sure your RICO, it is complying to the RICO. Whenever you incorporate, a lot of people ask me, can I use a federal corporation because it costs a little bit less? Can I have my family members as the director? The answer is no. You need to make sure that you are compliant with these RICO rules, because otherwise you won't be able to, function or operate successfully, because it would not be compliant. Like I said, if you want to involve your children, your spouse or your parents in the business, you can give them non-voting shares. They just cannot be the director. So if you want to, involve them in one way or the other, you can have them as a non-voting shareholders. We have seen a couple of examples in the past where, I compare the sole proprietor agent's income versus the PREC income. Here's another example just to give you a recap, that if you are earning $200,000 of income after same level of expenses as a PREC, your tax liability is much higher. I can also share the slideshow at the end of the day and you can, look back to it. But most of the people that are joined today, I'm pretty sure, have seen this example before. So I'll quickly use this example to refresh your memory. So let's assume you make $200,000 as a sole proprietor agent. After expenses, you're left with $145,000 of income. As a sole proprietor agent, we all know the higher you make, the more taxes you pay. That means your tax rate is 43% and you pay $62,000 in taxes. Under the PREC model, you have $200,000 of income, same level of expenses as a sole proprietor, and your tax liability is much less. How? Because you're able to, defer taxes by keeping most of the money in the corporation. Whereas under the sole proprietor agent, as soon as you get paid, you have to pay taxes on it. Under the corporation, in this scenario, you withdrew $45,000 of salary and the remainder you left in the corporation. So on the $100,000 that you left in the corporation, you're only paying 12.2% taxes, which is $12,200. Whereas on the money that you withdrew, which is $45,000 in this case, you paid some 24% tax bracket, which is $10,000. So even if I add both the personal taxes and the corporate taxes, your tax liability compared to sole proprietor is far less. You have a saving of $39,000 in this scenario. Some of the additional notes I wanted to mention about PREC is there might be additional insurance that you might be required to protect your assets when you open a PREC. A lot of people are wondering, how should I name my PREC? It can simply be your name and the last word is PREC, Personal Real Estate Corporation. Once again, it could also be a numbered corporation, but keep in mind that, later on, if you want to advertise or if you want to use it, you don't want it to get confused with your other numbered companies, you can just add the name and it doesn't cost much. Existing corporation can be converted into PREC. A lot of people ask me that, but you would need to, change the directors. You need to have the direct and indirect shareholders must be aligned with the regulations. So you have to make sure that, all of these are aligned before you finalize this. There can be passive investments that you can buy or purchase, but it is not advisable to hold properties under the PREC. I would recommend, opening a holding corporation and then buying your assets under that, because this way you are protected when it comes to, if someone was to sue you for, for malpractice or your business services that they have received, at least your assets are kept in a different pool altogether, a different corporation, and it is protected. So once again, is PREC right for you? These are some of the questions that you would want to ask yourself. Are you making more than your daily living expenses? Do you want to save for retirement? Could you benefit distributing income to your family members, which are lower income family members in your, like you might have an 18-year-old kid, or you might have a wife who's not working. Can you, split income with them and then, minimize that? So that is something that you can clearly take an advantage of if you have a PREC. And once again, where are you in your professional journey? Once you answer all of these 4 questions, that's the time when you can really decide if you want to open a PREC or not. If you're confused, you can always book an appointment with your accountant or myself, and I'll be more than happy to, help you make a decision. So a lot of the people have already opened a corporation. Now that you opened a corporation, you must be confused. What are some of the different types of taxes that you have to pay? So I'm going to break it down for you here. So as soon as you open a corporation, you have the numbered company name, you have the registered office address and the business number. You will technically get a business number mailed to your official registered office address. So that comes in a paper mail, so you have to wait for that. As soon as you receive that, you have to file initial return in the first 60 days of incorporating your business. So make sure the initial return is filed. After that, you pick your year end, which is for HST filing as well as for corporate tax filing. Now, one of the key things that I wanted to mention is, what does RP means? RP technically means for payroll account, RT means HST account, and RC means corporate tax account. These are the three accounts that are all associated to your business number. Just like we mentioned how your SIN number is associated with your personal tax information. Similarly, you have the business number associated with your business, and all of these three accounts are related to that. Now that you have incorporated, how can you keep track of income and expenses? If it's your first year, I would recommend not using a bookkeeping software, but rather just using Excel to kind of keep track of your income and expenses. This is a great Excel screenshot that I've shared with you. It shows all of the different types of expenses that you can claim, whether it be commission rebates, real estate tuition courses, advertising, meals and entertainment, and so on. All of these are something that are deductible. You should keep receipts for them, and make sure at the end of the year you provide all of this information to your accountant so they can prepare a consolidated income and expense summary for you when the time comes for preparing your taxes. A lot of the people have already signed for business accounts, right? You already have your CRA My account. So today I wanted to introduce, for most of you probably are familiar, but I wanted to again introduce you with CRA My business account. This looks a little bit different than your CRA My account. It basically keeps track of your HST, your corporate taxes, and your payroll account. So all three comes here. You can check all the correspondences from the CRA under the mail section, and you can keep track of how much is your taxes, how much was your income last year. Basically, it's a good portal to keep an eye out. If you haven't yet signed up for CRA My business account, I would highly recommend to do it, because at the end of the year, it will save you a lot of time. It is same as CRA My account, but a CRA My business account is actually meant for businesses. Now you must be wondering, what are the ID and password that you have to use in order to sign up for this? The cool part is, the same ID that you had used to log into your CRA My account, you can use the same ID and password to sign up for CRA My business account. There's no separate portal. You just basically Google sign into my CRA My business account, use the same CRA sign in and password that you had used for CRA My account, and it will give you access to your business as well. Once the PREC is open, now you must be wondering, all of the money that you were first making, it was all stuck inside the corporation. So how do I take money out of the corporation? Typically, you have a couple of options, right? You have the salary or you have the dividend that you can use to take money out of the corporation. Remember, salary, when you pay out yourself a salary, it works as an expense and it gets added to your personal income. So you pay taxes on your personal income there. The second option is paying yourself a dividend. In the dividend, it's a less expensive option because there's no CPP, there's no EI that you have to keep track of, and the income tax. You just straight write yourself a check, and the compliance is a lot less when it comes to paying a dividend rather than paying a monthly salary. So once again, this gets added to your personal income. And other things that you can use to pay from your PREC is some of your vehicle expenses, whether it be fuel, meals and entertainment, or whether it be costs related to fixing up your vehicle. All of these are eligible deductible expenses, provided you use that car strictly for business use. It is used not for family gathering. It's mostly used to go to client meetings, go to your office, and basically go to attending pre-construction project meetings. Some of the other things that you can use is beside the one that I had listed in the previous slide, where there was a laundry list of expenses, you can use 15% of your home office expenses to be used. Right now, I'm operating from a home office today. I'll basically calculate the home office expenses by dividing the square footage of the home office by the square footage of the house. And then I'll have a percentage that I can times by the property taxes, the utilities, the internet, and anything that I use in the home to kind of operate my office. One of the other things that I wanted to mention today is health savings account. Health savings account is something that is another way of using your corporation's money to pay for your expenses related to your health. So for example, a lot of you guys are realtors. As a realtor, we all know we don't have a medical plan or a dental plan from the business or from the employer because we're independent contractor. So how can we, make sure that we can use the PREC money and deduct it from the corporation and use it towards our medical expenses that we might incur? You can open something called the health savings account, and this is technically 100% deductible for the employers, and it's 100% tax-free to the employees. Because you are from your corporation, you're an employee, you can offer yourself a health savings account option, which will allow you to claim expenses related to dental braces, physiotherapy, laser eye surgery, whereas regularly these expenses are not deductible from the business. Using this option, it will allow you to deduct most of the expenses and basically, help you keep track of how you can use the money from the corporation. So hope this helps. So that kind of wraps up my, presentation for today. Thank you very much for joining in once again, and we'll see you next Tuesday. Take care. Bye-bye.